What's up, fuckers? This is day three of what are we doing? Day three of foundations. Day three of foundations. Today we're gonna be talking about price action and candlesticks. Now, I do these videos for anyone that has no clue what trading is. I did the first two talking about how to use TradingView and then committing to trading. So if you made it this far, I assume you've made some sort of commitment and you're taking the first step. So I'm glad you're still here. Today we're going to be talking about, like I said, price action and candlesticks. Kind of going into the charts, showing you what all this stuff means because I know it's a lot. I mean, when I first started trading this, you know what? Let me just show you right now. This shit meant absolutely nothing to me, and I didn't understand it whatsoever. So we're gonna walk through everything, kind of starting from the beginning. So I guess what a better place to start than to draw you possibly the shittiest representation of what a candlestick is, but we're gonna do it right now live. Where's the box? Pause on that. We have, this is gonna be our green or blue. My green candles are blue, but also I guess I didn't even mention this, what bullish and bearish is. So here we are. I'm gonna first draw this out, and is there a drawing tool somewhere here? Brush. Sure, sure. So we're gonna do brush here, brush there. Gorgeous. Look at that. Now we're gonna do another one, but it's gonna be a black candle or a red one, as we like to call it. So we have a bullish candle, and we're gonna finish this bearish candle off here. What? Oh wow! Why was the other one brushed so much cleaner? What did I do? There we go. There. What? Okay, hold on. There you go. All right. We're gonna change the color of this line just so you guys really get it here. So this is gonna be, let's just do, oh, hold on, hold on, black line. And wow, this is taking much longer than I thought it would. Okay, here we go. All right, all right, all right. And then we have stuff to draw out. This is bullish, bullish, and this is bearish. Now, all this really means, and this is all just complicated words that traders like to use. I like to think of it as like gatekeeping. So if you're in like a little Starbucks and you hear these traders talking in front of you, and they're like, "Oh, you got bullish market structure today," or "Tomorrow's looking like the bears are going to take over." That's just so you don't know what the fuck they're talking about, right? So they don't spill the beans on you. All it means is in bullish market structure, you have an upward movement. So we're going to draw that out too. Oh, you know what? The pathing tool might be good for this. Where is my pathing tool? Pathing tool. All that means is we have upward movement in the market. So you're creating higher highs and higher lows. So this is the low here. Let's just say this is a higher low, higher high from this high, higher low from this low, higher high from this high. Higher, you're just moving upwards basically. Like the general trend is upwards. And that kind of goes for candles as well. So if you have a bullish candle, it's going to be a green candle, meaning there is more buying pressure, in said candle, meaning the market is going up, right? Per candle going up, that is bullish. And vice versa, if it's going down, that's going to be bearish, right? This is same thing. So just like these are higher highs, so and higher lows, this is going to be lower lows and lower highs. So this is a high, this is going to be a low. Now we make a lower high and a lower low. You kind of get the idea, right? It's the same pattern, right? Bearish, bullish. You understand it. We're going to go into breaks of structure and what that all means eventually. But for now, the two things you have to know: bearish and bullish, up, down, all correlate with each other. And the candles also mean the same thing. So bearish candle going down. Also, if you want to like have a good way of remembering this for people that forget, you can think of a bull. I'm not going to really draw a bull. You can imagine a bull, and then it's like swinging its head up, right? It's just flicking its head up, pushing something upwards. Market's going up. You think of a bear swinging its claw, swinging it down, right? Swinging it down. So bulls upward, bears downward, right? I guess for a good example, we could say since this whole side of the chart over here, what we're seeing in TradingView, all these indexes, Bitcoin, whatever's here is all green. We are now in a bullish market for the day, right? So this is always just on the daily. So if everything's green, percentages are all green, that means we are bullish on the day. Like for MNQ, you can see over here, it says 0.62. Yeah, we're bullish on the day for 0.62%, right? So from the day, the time that we opened up yesterday at midnight to currently right now, we are up 0.6, or yeah, 0.62%. Right. Anyway, that's all you guys have to know. So now leading into the next thing is how these candles print. And I think I might have made or shown it in a small video or like a small portion of a video about how like the candles were printing. But in essence, you could think about it this way. If you have a bullish candle, that means price is going up, just like we were talking about, right? So that would have to mean that this bottom portion of the candle, of the body, I also forgot to mention that. These little things up here, up and down, are called wicks. And this thick portion is the body of the candle, right? So this bottom portion, bottom part of the body here would be the open. Oh, that's a terrible arrow. That is the open of the candle. That is when the candle opens. So let's say we're on a minute time frame, and since right now it's 9:49, once 9:50 hits, the price is going to open at this level, right? And then you're going to see the candle print. So it's just going up and down, or maybe not even up and down. It could just shoot up. Depends on what the candle wants to do. And we're going to go into what price action means, and how to read candles, all that stuff in a second. But yeah, you're going to see a candle print up and down. Now, when the candle finishes printing, now it's, let's say, 9:51, and we get this beautiful candle right here. What that means is it opened at this price. It then closed at this price, right? So like I said, when it hits 9:50:59, the last second of that minute, it doesn't have to be a minute, right? The price is completely fractal, so it's just dependent on what time frame you're on. Like right now, we're sitting on the 1 hour time frame, as you can see up here, which means that each candle prints in a 1 hour time frame. So that's all the same throughout every single thing. So that's how you understand how these candles print, like the length of them, I guess you could say, the duration that these candles print. If you're in that certain time frame, that is how long each individual candle prints. So in the 1 minute, each candle prints a minute. 5 minute, each candle prints for 5 minutes, so on and so forth. So up here is going to be the close of the candle. Close. Yikes, that is some really bad writing. Close of the candle. And now what we have left here is these wicks, right? What do these wicks mean? These wicks are the highs and lows of the candle. So this is going to be the high, hello, the high of the candle, and this will be the low of the candle. Low of candle, right? So that's all you need to know for the bullish candle itself. And now moving to the bearish candle, if you could kind of imagine it now flipped upside down, since the market is going downwards, it's going to be the top of the body will now be the open. Let me move this real quick, it's in the way. This will now be the open. Open. It's getting really redundant here, how long it takes to draw these things out. And this will be the close, since in that respected time frame, price went down for that minute. Let's say if this is all within a minute time frame, if price went down for that minute, then that means that it went from opening on a higher level or on a higher price and closing below that price, making it a red candle or a gray candle, whatever color you have your candle as. But all you need to know is that it's a bearish candle, right? That close will be below the open. And the same thing as before, these wicks don't change. This wick is still the high. High, hello. And this wick is the low. Get the idea, right? So this is fundamentally all you have to know as far as reading candles goes. And what I recommend you guys doing is kind of going into the charts and just going step by step through these candles and kind of imagining it print out, if you could even call it that. Or just trying to read how price action works, right? So if you look at a blue candle, you say it opened here, closed here, this was the high, this was the low. You're gonna get it really quickly, right? This isn't complicated stuff. This isn't crazy stuff at all, right? This is all just simple things, and you'll understand fairly quickly. But if we go into the charts, you'll start to understand, right? So this is on a 1 hour time frame. What does that mean? Oh, you can actually watch this one print right now, right? So there's 7 minutes here. This is how it looks when it prints. I mean, it's a 1 hour candle, and there's not much volatility in this market right now, but you kind of see, actually, let's go to the 1 minute so you could see it a little bit better. Maybe even like the 5 second will show you. But yeah, you see this right here. So this candle opened up here. It is now printing upwards, making it, see, right? So also another important thing to say is while a candle is printing, it could flip between being bearish and bullish, right? It is only when that candle actually prints through do you see what that candle was, whether it was red or green, right? Whether it moved price up or dropped price lower. Now, also another thing to note, when you're practicing this stuff, go back to the 1 hour time frame like I was talking about before. Oh, hold on. Here we have our drawings, price action, right? So the order flow of price, like I was saying, bullish or bearish. So if you guys want to practice this stuff and kind of get a good eye as to how price is moving based on its respected time frame, you go to any time frame you want. It really doesn't matter. And you identify whether we're in a bullish or a bearish order flow. And this might be a little bit difficult if it gets a little bit, I guess, choppy. It's harder to tell. But if we're going on like this area right here, this is very clearly bullish. I want to even see like a cleaner price action here. Like this is just straight chop, but you kind of get the idea. Here, right? And if you put the line indicator on here too, I don't know if I mentioned this in my my trading view video, but if you go up here where these candles are, you can kind of change them to whatever median, or yeah, I guess that's the right way to say it, of chart that you want. So if you go to the line, again, you could kind of identify market structure this way, right? So we're here bullish still, kind of broke structure. We made a lower low, but still kind of bullish. We're moving upwards. If you go to, let's say even a 4 hour time frame, you see the overall price action right here, right? Still kind of moving upwards. Hard to tell at some points, like you're kind of breaking structure at some of these points, but you get the overall idea. Like over here, complete bearish structure, right? Lower lows, lower highs. Even this point, right? This is the high, made another one, but it was lower than the previous one. Keep going downwards, right? So what I want you guys to do, a little quick homework for anyone that's new to this stuff. Oh, this looks a lot worse than the 4 hour of my drawings. For anyone that's new to this stuff, just go on the charts and try to identify whether in a bullish or bearish market structure, and also pick out certain candles and try to identify if it's a red, green candle, bearish or bullish candle, where open, close, it's a high and it's a low point. I'm kind of debating whether we should go into price action in this video or just kind of leave it at that. How much time are we reading? Actually, I have no clue how long this. Oh, okay. 11 minutes. Yeah, I don't know. I think I'm gonna just leave it at this. So yeah, for your homework, guys. Also, hope you've been taking notes. But for your homework, right, just do that. I guess I could say go to the chart, go into the chart, 5 different time frames, and with each of those time frames, identify one bullish structure, one bearish structure, and make sure it is that. Which means again, bullish, higher highs, higher lows; bearish, lower highs, lower lows. And then within any time frame you'd like, look at a candle, find a candle, and identify open, close, a high, and a low. You know what? Now that we're actually talking about candles, I could go into this really quickly. So how we have these candles right here, kind of ideal, if you want to say, just like the perfectly built, even candle. But you're not going to get that. You know, you got to get a lot of very strange candles at times. You'll have these big, thick ones we have to call the Drake candles, like over here. You'll have ones that look like this, where it's just mostly wick and then a little bit of body. Really any sort of candle you could ever possibly think of, you'll see. You see just straight wick, you can see just straight body, just a full print through a price. So some important ones to touch up on are bullish and bearish displacing or engulfing candles, and also the dojis. So I think it'd probably be easier to just pull up a graph of what a doji candle looks like instead of drawing this shit out for you or even trying to find one on the charts. But what you're gonna see, and you don't have to look at this dragonfly bullshit, all you have to just keep in mind is a small body, big wick, right? This whatever says log leg, whatever the fuck that is, forget that. But yeah, so if it looks like the log leg, again, don't write this shit down. None of these words matter. You don't have to remember that. Just doji candles or doji candles doesn't change anything. If it has equal length wicks on both sides, that most likely indicates that price does not have a determined direction, which means what for you? Lift your fucking hands off the keyboard and don't do anything, right? If you don't know where price wants to go, if there's no clear draw, again, we're gonna get into draws in other videos, don't touch anything, right? And this isn't like a strict rule. This is something to just kind of think about when you are trading. So if we go over here, I guess I could try to find some sort of instance for you. Probably better like in a 5-minute time frame. Doji anywhere? Anyone want to give me a doji? Um, this could be one of them. It's not a very like hardy thing. It doesn't tell you a lot, but it's one of those things to keep in mind, like especially on the 5 minute. If you're trading on a shorter time frame, if you're trading within an hour time span, and you get like one of these, right? That kind of tells you again, like you could see here, this prints out and price does not break out downwards. It does not break out upwards. It just chops in this range. It just chops. It just moves. Nothing happens here. We're kind of, sitting in a normal area, moving horizontally. There's no vertical movement. There's no big movements. There's no big draws to take. That's kind of what you get when you get a doji, right? There's no clear direction. So we're just going to sit in the same area and just, barcode, right? This is all it is, just barcode up and down. And that's kind of why you want to avoid these things and why it's decent to know, is just kind of tells you a little bit about where price wants to go. Same thing with what I was talking about before, engulfing candles, or just displacement candles in general. We'll stick on the word displacement candles. Now, what does that mean? When prices displace right? It's moving. It's moving somewhere. Where is it moving? Depending on the candle, depending on a draw of liquidity, which again, we're going to talk on this, touch on this before. But displacement candle is just a big boy Drake candles, the big Diddy candles. And I could show you that in today's trade that I took, if I could find it over here, right? What we have here, big sell-off. Then we get this little doji here, not entering yet. That doesn't give me a clear direction. Then we get a little pullback up here. Still no clear direction. This is a bullish candle when we want to take shorts. We want to sell the market. We want to drop down. Then what do we get? This big, thick, juicy candle, right? So after these candles print and we're kind of struggling to make our way up, we get these two candles, one with a high wick on the top that just shows strong rejection against the higher sides and pointing towards the downside, right? We want to go down. Everyone's selling, a lot of selling pressure here. And we get this big filled candle, right? This isn't really like the definition of an engulfing candle. It's more of this one here, but kind of just getting to the idea of displacement candles right now. This big displacement tells you a lot, right? It tells you that we're going to go down and we're seeking something down here, right? It's like a magnet. That liquidity is just pulling you down and you're trying to find an area to enter. This displacement candle would be your entry, which is exactly what it was today. So I took the entry right here. It printed over here because I did it on a market order. But the second this printed, I took the entry here. Stops up here, I think it was, and I targeted lows somewhere down here. I think it was. It's gonna be kind of hard to find it on Zoom. I think it's right, yeah, right here. So that's the low I was targeting, unprotected. And we did get break even today. I talked about that on my recap today. So if you guys want to take a look at that, got break even, and then it just kind of flew straight to my TP. But regardless, right? Displacement candles are one of those things that I take a lot of my trades on because that shows a lot of confidence in what direction the market wants to move. So going back into what else I was talking about was engulfing candles, one of those other things. If you get a movement towards the upside, let's say you're in a downward trend, like we were talking about before, we have bearish order flow. Look at the line chart. What does this shit look like? Just an absolute sell-off. We're still going down, still looking for these lows. Go back to your candles. So if you get some sort of a sign, I guess you could say, a candle that shows you, wow, that's a big juicy candle, Eric. That shit's huge, right? It's going upwards. What does that mean? Are we going up? No. We are still in bearish order flow. We are still seeking some sort of lows, right? Oh, actually, I marked out the wrong thing. Sorry. Anyway, you get this juicy candle, I guess. I mean, that really isn't that juicy, but regardless, right? You get this juicy candle, and what do you get right after it? A big black candle engulfing it. The whole thing, right? So when we talk about engulfing, it's the body, right? So you look at the body of this candle. This second one swallows that shit whole, right? Significantly bigger. What does that tell us? We're going for the lows right here that I marked out, right? We haven't hit them yet. Big juicy candle tells us we're going for these lows. Engulfing candle. This would also be a pretty fine entry, except for the fact that the stops aren't that pretty. So the RR isn't great. It's only a 90 tick trade. Loki, I could have taken this. Oh no, you would have got stopped out. No. No, you wouldn't. Sorry. You would have taken that. Sorry. Regardless. Anyway, yeah. So the engulfing candle tells you, whatever direction the market tried to go in the last candle, it ain't happening, right? We want to go down. We're taking all this stuff out and we're moving downwards, right? So that's something to look forward to, or to look at and look out for when you guys are scalping the market and not looking for trades. Because not we're doing that yet. We're not. If for anyone that's just starting right now, don't look for trades. Don't even think about executing. Keep with the basics, with what I'm showing you right now. Try to learn TradingView, like I showed you on day one. Figure out if you want to do this shit, like I talked about on day two. And then, again, all the stuff that I just printed out for you today, that I just showed you today, take notes on this, then head onto the markets and just look for it. Look for bearish structure, look for bullish structure, look for bullish candles, look for bearish candles, identify its highs, lows, opens, closes, identify bullish engulfing, bearish engulfing candles, and some dojis while you're at it if you want to, right? Not the most important candles out there, but they definitely do tell you something, and it's definitely something that I will touch up on and sometimes use in my trades. Not to execute a trade, but to tell me when to not trade. Anyway, I think that's all for today that I'm going to touch up on. I'm going to go over price action more in depth tomorrow. Oh, will I? Now that I'm thinking about it, there isn't really much left. How much time are we here for? 19 minutes already? Damn, you guys bored? Probably are. Oh, fuck it. Too bad for you guys. Fractal pricing, right? So as we were touching up on before, we have these candles that print for its respected time frame. It will print like we're on the 1 hour here. Each individual candle will print for an hour. Now, when we're going to go into confluences in future videos, we're going to talk about the reasons why we take our trades. All these reasons are all the same on every single time frame, right? That's what fractal pricing means. So if you see some sort of confluence on the 1 minute time frame, you'll also see them on the 4 hour. You'll also see them on the 1 week. You'll also see them on the 1 month, right? You have fair value gap. You have fair value gaps here. You have bullish engulfing candles. You have bearish engulfing candles. These are all things you will consistently see in every single time frame. Does that mean you should be executing your trades in this time frame? No. Depends on your trading plan, depends on what you're looking for, depends on what you want to do. Me personally, since I trade for about, what is it? I'm on the markets just actively looking for a trade for an hour to maybe 2 hours in a day, which means the trades that I execute are going to be anywhere between a minute sometimes to maybe 30 minutes. At its very max, I think I've sat at a trade for like 35 minutes with this this new model that I trade. So that being said, it really just depends on your model. But for me specifically, if you find a confluence on the 1 week, the time it takes for this shit to print out won't matter for you if you're trading for an hour in the day, right? So in a 1 week candle close, how many hours do you have? I mean, I'm going to do the math right here if you want me to. It's 24 times 7, right? 168 candles to print one of these, and that's an hour. And then if you want to figure out how many minute candles that is, multiply that bitch by 60, that's 10,000 1 minute candles to make one of these 1 week candles, right? So also another thing to mention here is, what is it? All these candles coincide in each other, right? So in order to make this 1 week candle, you have day candles. 7-day candles make this 1 week candle. Now within those 7-day candles, each one of those day candles has hour candles. Each one of those hour candles has minute candles, 5-minute candles, 15-minute candles. They all make up each other, right? So when you're watching price print out in any circumstance, there is always another candle, a smaller version of that candle, a smaller version of this price action. We can go to the 1 second time frame here. These 60 of these 1 second candles are making this 1 minute candle, right? You kind of get the idea here. It's just, it all coincides. It's all fractal. Everything you see on one time frame, you'll see on the other, right? Now that goes into what time frame should I sit on to find confluences that work for me. Me personally, I do pre-market analysis on the 1 hour. That's where I find my draw on liquidity, which we're going to go over in other videos. I keep saying that, but put it out there. Like, don't freak out right now if you're a new trader. I'm saying shit you don't understand. That's fine. Wait for the new videos. If you want to know now, if you have time now, listen, there's a lot of people that make good videos out there. I'm kind of just doing this for me and for you guys, kind of, spread some love, spread this knowledge that I've gained over the year and a half that I've been doing this. But there's plenty of other videos out there that are probably miles better than mine is. That being said, I'd love for you guys to stick around and keep watching my stuff. But you know what? That's your choice. And as long as you guys are picking one strategy, you're picking one person to follow, and you're consistently following them, not changing up your trading plan, just following them, understanding what they're doing, learning from them, and growing from that. That's all I need to know. That's all I need to know to make me happy, right? You don't have to come here. You don't have to pay any mind to me as long as you guys are doing the right thing to find yourselves consistently working at the goal that you want to be at, right? Or the target goal that you're trying to hit. So that's really all that's important here. That being said, I will be making more videos. You will be seeing more of me. Be figuring more about all these different confluences that I'm talking about. So don't panic yet. Yet that is. But yeah, I think is that it? I keep saying that, but really, I try to write a plan on the side here so I know what to say, and I just always end up running on random tangents and kind of forgetting where I was gonna guide myself. But for the most part, I think that's it. I think we're gonna touch more on price action, what a break of structure looks like in other videos. Again, don't worry about these words if you don't understand what I'm saying. That's kind of it. Yeah. So again, price is fractal, small patterns repeat on larger scales. So anything you see on the 1 minute is going to be played out on every other time frame. Also, what I want to mention based on that is higher time frames always hold higher power. So if you have, I hesitate to talk about fair value gaps as I haven't mentioned it yet. But let's say you have some sort of confluence, something that's telling you on the 1 minute that price will go up. For our instance here, we're going to say fair value gap, but for anyone that doesn't know what that is and they're waiting for my next videos to come out for some reason, we'll touch up on that later. But let's just say you have something that's telling you the market will go up, right? Like we have here, this fair value gap, the 1 minute fair value gap that we're respecting, market's reacting off of it, goes up. But on the 5 minute, you have, let's just say there's another fair value gap here. You have a fair value gap, again, it's not there, but let's just mark this out. You have a fair value gap right there, right? What's going to be respected more? A fair value gap that was made on a 1 minute time frame or one that was made on a 5 minute, right? So in that case, what you're expecting to happen here is not price to bounce off this 1 minute and just fucking skyrocket. It's to respect this 5 minute and go downwards. Also, this is complete discretion. This is completely based on the terms of the market price action as we're looking at it. So right now we're in a bullish order flow. This means nothing, right? But what I'm saying is, if there's a higher time frame that has a complete different confluence, that's going to be the confluence that you want to follow and nothing else, right? Always trade with discretion, always trade with context. And we're kind of going to touch over all these other confluences with later videos. But for now, that's it. Sorry for laying that all on you. Follow the homework, find some market structure. Like I said, within 5 different time frames, find one bullish and one bearish structure. And within any time frame, identify some candles. Let's just say 10 candles. Identify 10 separate candles. Find its highs, find its lows, find its open, find its close. Make sure each of them are not all bullish or not all bearish. Identify some doji candles. Identify some engulfing candles. Identify some displacement candles for both bullish and bearish candles. This won't take you a long time. And if you were worried that it will, stop trading. Fuck off. That's basically it. Well, thanks for coming, guys. Have a good one. God bless.